Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about QUANTUMSCAPE CORP quarterly report. QuantumScape Corporation offers a range of businesses and services focused on developing and commercializing innovative battery technology. Specifically, the company provides solid-state lithium metal batteries for electric vehicles, batteries for other applications beyond electric vehicles. QuantumScape Corp's stock skyrockets. A year of breakthroughs and partnerships in the past year, QuantumScape Corp's stock price has surged an impressive 195.61%, driven by significant advancements in its solid-state battery technology and strategic partnerships. The company's breakthroughs include substantial improvements to its QS-5 solid-state battery cells, which offer higher energy density, faster charging times, and improved safety. The successful implementation of the proprietary Cobra ceramic separator manufacturing process has also been a major catalyst for growth. This new method accelerates production by 25 times compared to its predecessor and reduces costs, paving the way for large-scale manufacturing. QuantumScape's expanded strategic partnerships with Volkswagen's PowerCo, Corning, and Murata Manufacturing have further fueled investor enthusiasm. The company's improved financial performance and outlook, including a narrower-than-expected loss in Q3 2025 earnings, has also contributed to its stock surge. These combined announcements and advancements have propelled QuantumScape's stock, reaching a high of $19 per share from the $3–4 range at the beginning of the year. The company's progress towards commercialization and long-term sustainability has enhanced investor confidence, driving its stock price upwards. The primary drivers of revenue growth or decline in a company's financial performance are multifaceted. On the growth side, key factors include the development and commercialization of innovative products such as solid-state lithium metal batteries, improvements in cathode technology, advancements in cell energy density and fast charging capability, and successful partnerships with automotive OEMs and other industry players. Additionally, automation and process control, PowerCo collaboration agreement, and entry into definitive volume production or license agreements with customers contribute to revenue growth. On the decline side, factors such as delays and cost overruns related to pilot line construction and production process development, shortages in key supplies, disruptions to supply chains due to global events, and defects or errors in design and manufacture of solid-state battery cells can negatively impact revenue. Furthermore, failure to meet customer specifications for cost, performance, and safety, geopolitical risks, misappropriation of intellectual property by competitors, and inadequate protection of intellectual property outside the United States also contribute to revenue decline. Overall, a company's ability to innovate, partner effectively, and manage supply chain and production processes efficiently is crucial in driving revenue growth or mitigating decline. Net income and profit margins have experienced a decline. Initially, net income decreased from a loss of $105.8 million to a loss of $334.9 million in 3 months due to significant expenses and investments in research and development, production capabilities, and sales and marketing activities. Profit margins have also been negatively impacted by various factors such as increased competition, reduced prices, emergence of alternative technologies, tariffs, trade restrictions, and regulatory changes. Geopolitical conflicts, global trade tensions, and changing regulations have further affected supply chain, operations, and sales. The decline in net income and profit margins can be attributed to the company's continued focus on investments and expenses, as well as external factors such as geopolitical conflicts and regulatory changes. The company's financial performance indicates a strong ability to generate cash from its operations. The positive operating cash flow is evident from the net increase in cash equivalents, and restricted cash, which stood at $82,112 in 2025. This suggests that the company is capable of producing sufficient cash to meet its obligations and invest in growth opportunities, positioning it for long-term success. The company's total debt level has seen a notable decrease from $164,548 to $127,484. However, the interest expenses have remained relatively stable, with a slight reduction from $1,684 in 2024 to $1,547 in 2025. This indicates that despite the decrease in debt, the financial burden of servicing this debt has not significantly changed. Management is projecting a challenging outlook for the company due to significant expenses and continuing losses in the foreseeable future. Despite this, they are prioritizing product development, particularly in cathode and separator technology, with the goal of improving quality, consistency, and reliability through automation and process control. The company plans to commercialize their battery technology through a licensing arrangement with PowerCo and aims to make their solid-state battery cells widely available through collaboration with automotive OEMs. They also intend to explore opportunities in other large markets, including stationary storage, consumer electronics, data centers, robotics, defense, and aviation. However, management is cautious about achieving company objectives due to various risks and challenges, including technical or production challenges, technological developments affecting battery commercial potential, capital availability for R&D and growth, and regulatory investigations. The company's financial summary reveals a notable trend. Despite not paying dividends to its shareholders, the company has been actively buying back shares through an ATM offering from February 2023 to August 2025. This indicates that the company is prioritizing share repurchases over dividend payments, potentially aiming to boost shareholder value through this strategy. Concerns about inventory buildup or supply chain disruption are prevalent throughout the financial summary. Several key points highlight these risks. Supply chain challenges pose a significant risk factor, page 32. Reliance on third-party suppliers and estimating future demand and supply is challenging, page 40. Global supply chain issues, including supplier non-performance and material shortages, threaten production, pages 43-44. Inventory buildup due to overestimation of demand and supply chain disruption are interconnected risks, page 48. These concerns underscore the need for careful management of supply chains and inventory levels to mitigate potential disruptions. That concludes the financial summary for QUANTUMSCAPE CORP. Feel free to comment below, and I will be happy to answer them when possible.